A financial war is erupting in the silver market. On one side, a Chinese billionaire has just wagered $300 million opposing silver. On the other, the Trump administration is fighting back. The bet was placed on the Shanghai Futures Exchange, representing a massive 450 tons of physical silver, one of the largest short positions in history. Prominent trader Bian Ximing believes the recent silver surge to $120 was purely speculative and is betting on a massive return to lower levels. But this isn't just about price charts. This is a geopolitical chess game for control of one of the world's most critical industrial minerals. The Trump administration has viewed this massive short position as a direct threat to the stability of critical supply chains and is now taking unprecedented action. President Trump has convened a coalition of 54 countries to address mineral security, with J.D. Vance and Marco Rubio leading the charge to prevent China from cornering the market. A high-level ministerial meeting recently focused on silver's inclusion as a critical mineral, marking a shift in how the West perceives this precious resource. The strategy is clear: force prices higher, restructure global supply chains and restrict Chinese access to Western-produced metals through strict export controls. This simultaneous deployment of economic sanctions, supply chain limitations, and strategic stockpiling represents a new era of commodity weaponization. Before this conflict, silver had seen an extraordinary rally, quadrupling in price to over $118 an ounce, fueled by global uncertainty and trade tensions. However, the recent nomination of Kevin Warsh as Fed chair was perceived as a hawkish turn, causing a sharp correction that sent silver prices tumbling to the $70 range. This single announcement sparked billions in losses for gold and silver bulls, creating the perfect opportunity for short sellers like Bian Ximing to cash in on their bets. Despite the price drop, the industrial demand for silver remains at record highs. Photovoltaics and electric mobility now account for nearly 40% of total demand. The addition of silver to the list of U.S. critical minerals underscores its vital importance in the production of semiconductors and advanced AI infrastructure. The silver market has been in a structural supply deficit for years. Production is stagnant, and recycling has reached a plateau, leaving the market vulnerable to massive swings. Pulling physical silver out of the ground is becoming increasingly expensive, providing a fundamental flaw that paper market speculators often ignore. China's stricter controls on its own silver exports have only added fuel to the fire, as the East and West battle for dominance over this essential commodity. This is more than a trade. It's a war between those who believe silver is just a number on a screen and those who recognize it as a tangible pillar of economic power. As billions of dollars shift between global titans, the silver market is becoming the ultimate arena for this 21st century financial war. For the individual investor, the stakes couldn't be higher. Silver continues to act as a safe haven for those seeking protection from currency debasement. The persistent pressure from President Trump on the Federal Reserve to cut interest rates represents a significant long-term upside risk for precious metals. When interest rates fall and inflation remains elevated, silver often emerges as the preferred alternative for those fleeing the declining purchasing power of the dollar. However, the market is increasingly driven by financial and speculative flows, which can amplify volatility and lead to the type of sharp crashes we've recently seen. Increased margin requirements by exchanges like the CME have also raised the cost of holding positions, forcing many retail investors to close their trades prematurely. The interplay of these forces suggests a period of continued volatility and strategic maneuvering between global finance titans and political powerhouses. Despite the recent crash, many analysts remain bullish, with Bank of America and others raising their average price forecasts for the years ahead. The conversation about triple-digit silver is no longer just a fringe theory. It is a serious discussion based on the fundamental shift in global demand and supply. The reality of supply is the ultimate anchor. As it becomes harder to pull silver from the earth, the physical metal becomes more precious by the day. The most resilient investors in this era are those who can look past the daily volatility and understand the deep-seated macroeconomic shifts occurring globally. This is a multi-dimensional chess game where every move by a billionaire trader is countered by a strategic play from the highest levels of government. The $300 million wager against silver may have won the first round, but the fight for the physical metal is far from over. This is just the beginning. Navigating these markets requires immense discipline and a clear strategy. Understanding the macro forces at play is your best defense against the chaos. Who will win the war for silver? Only time will tell, but one thing is certain. The era of cheap, accessible silver is rapidly coming to an end. As always, this information is for educational purposes only. Always consult with a certified financial advisor before making any investment decisions. Thank you for watching this deep dive into the silver war. Stay tuned for more updates on the global markets that matter most.